Hello, everyone. Welcome to our webinar on paying the tuition bill. We're really glad to have you join us today and happy that you're taking time out of your lunch hour to learn about this topic with us. And it's an important financial wellness topic. As I know well, I am paying for a child's tuition right now, so I'm here in the trenches with you. So my name is Jen Fries. I'm the Community Engagement Manager for the Harvard Federal Credit Union. Now, I just want to mention our name. Some of you may have known us and loved us, hopefully, under our former name. We used to be the Harvard University Employees Credit Union, and we just changed our name this week. We are now going forward going to be known as the Harvard Federal Credit Union. And I'll tell you a little bit more about the credit union in a moment. I also just want to mention that today is a webinar format. We're going to ask you to put your questions into the Q&A feature of the chat. So if you look, it should say on your Zoom toolbox Q&A. Go ahead and put any questions in there. Right now, if you'd like to put into the Q&A where you're from, that will help me just know where people are calling in from, or you can put questions now. And we will also, we'll save them for the end by and large. So a little bit about how is a credit union different from a bank and how is Harvard FCU different? So the first thing you should know is that as a credit union, we are a not-for-profit financial institution. We are owned by our members and we operate for the good of our members and for the community. So we exclusively serve the Harvard community as well as our teaching hospitals such as Beth Israel Lahey. Most of you are joining us today from one of the Beth Israel Lahey hospitals. Welcome. And the credit union, just because we're owned by the members and we don't have to have profit that goes off to somewhere else or to shareholders, we are able to offer very good rates on your basic banking services. We also provide free ATM access nationwide. And just in general, you're going to see fewer charges and fees and better rates at a credit union. So I invite you to check that out. We have virtual banking, of course, digital banking, and shared branches. So if you don't happen to be in Massachusetts or you don't happen to be near one of our branches, you can go into a whole nationwide network of credit unions and do banking face-to-face there and still have that experience and be able to bank with us from wherever you are. So we hope you'll take advantage of that. So one of the important things as we're going into this discussion and as you're planning for this next step in your life is who is paying the tuition bill. Actually, if you are able to put into the Q&A, I'm assuming that most people on this call are parents who will be paying a tuition bill for their undergraduate children. However, there's content in here that is applicable to folks who are pursuing their own education, whether that be undergraduate or graduate school. So if you want to put your situation into the Q&A, I will keep that in mind. So as you're getting ready for your child to go to college, I think it is important to have open conversations with your child and with both parents, particularly if you're separated or divorced, about who is able to pay what, so that there are no surprises. Some families may want to bring grandparents into this conversation. Some folks may want to bring step-parents into the conversation. So it really depends if you have a blended family or if you have others in the family who might want to contribute, just having that open conversation. And so that when somebody is making a decision, for instance, between colleges and financial aid packages, They're doing that knowing sort of what the expectations are. And, maybe it's going to be um, a certain amount. Maybe parents are willing to pay up to half or able to pay a certain flat amount per year. And then if the student knows that, then that's going to be helpful to them. Of course, if you are yourself going to school, which I see some folks are pursuing their own higher education, there may be a conversation again with a spouse or partner about what can they take on in terms of bills in order to help you with this journey. So I think in all cases, having an open conversation about that is going to be really important. So one thing that can be very confusing, especially first time through for parents, is figuring out what is going to be the true cost for my child to go to university or college, or for me. So the first step is all the US colleges and universities are going to publish their build costs each year. Sometimes you're looking at last year's and you just have to estimate increases, but you'll be able to take a look at what would be the cost for tuition, room and board, any required fees. Those are going to be publicized online. We're using 50,000 as an example here just because it's a round number and is going to allow us to talk about percentages and things like that more easily. By comparison, my child is enrolled at our state school as an in-state student, UMass Amherst. Her bill is about 15,500 per semester for room and board and tuition. So about 31,000 per year. So going in-state at your local state school is going to be less expensive. However, there may be less in financial aid. So next step would be looking at what is the financial aid offer from the college or university. So that's known as institutional grants or scholarships. Those are scholarships are amounts that your student is not going to need to pay back. And typically the college will potentially come up with some of those individual grants and scholarships. You may also be able to identify some private scholarships for your student, whether that be through institutions that you belong to, such as labor unions, or your child's school may offer scholarships. There may be in your community scholarships available. And then students are eligible to take up to 5,500 in federal student loans. And then there is a fee that's taken off the top of that. So you end up with 5,400 approximately in federal student loans per year that's available. So once you take all those amounts off, then this individual student, this example student, is looking at a tuition bill of $25,000 a year. So, and I just want to note, it's here on the bottom of the slide that if your student is eligible for federal work study, that would be having a job typically on campus, sometimes at a close by institution that, like some nonprofits participate in federal work study. That amount doesn't go directly to the tuition bill. Most students use that amount for spending money. But you could choose to apply it to the tuition bill. It's just not going to happen automatically. Okay. So most colleges are going to be billing by semester. So there'll be an amount that's due in the summertime, typically July, August. And there's an amount that's going to be due in the winter for the spring semester. And that typically will be November or December. You want to make sure that you know what your college's deadlines are, because if you have not paid on time, your student may be barred from registering for classes or other things that they may need to do, like finalizing their housing. So you want to be on top of your deadlines, figure out what those are going to be for you, and definitely communicate regularly with your college financial aid office if you see any concerns with making payments. Now, also, most colleges are going to offer a payment plan where you can divide that up into a monthly payment. So, again, keep in close communication with your college about what options are. And so I had a question in the chat. Is it possible to pay the tuition fully and not by semester? Typically, it's going to be twice a year at that's going to be the least that you'll pay. They're not normally going to bill you for the whole year because things change. Sometimes students need to take a semester off, that kind of thing. But you could reach out to your college if you have a particular situation. But normally, if you are just wanting to pay for it, it will be twice a year. There are a number of ways that you can look at reducing costs. There may be less expensive room or board options. UMass Amherst is fairly typical that they often require freshmen to have a full meal plan. 3 meals a day or unlimited in the beginning, but then you can typically knock it down for later semesters. So if you find out your student is, making oatmeal in their room every morning for breakfast and they're not using the dining hall, you could cut it back so that they have just like 2 meals a day, and that's plenty for them. In our family, we chose to keep my child on her existing health insurance. And because we're in state, it's easy access. We confirmed that the UMass Health Services does accept her health insurance. And so we're saving $2,200 a year by electing not to waiving the health insurance. So that could be an option for you if you have particularly if you already have a family plan and you're already paying for your child's family plan health insurance, it may make sense to go ahead and waive the coverage. And that's a decision, based on your family's needs, obviously. Some schools have sibling discounts. You may have the option to have your student graduate early because they're transferring in credits. Some schools do accept advanced placement courses as credit. Many don't give credit, but they do give you credit toward your major. So you have to find out what the story is with your school. And if your student has been part of a high school where they had dual enrollment, typically those credits will transfer over. So you may have the option to have your student graduate early and save money if that's something that they want to do. And then there are other scholarship options that they can investigate, such as becoming an RA or a resident advisor. That would typically give you an amount off the cost of your room, or an amount toward your tuition, depending on how the school handles it. So if your student is inclined to want to be that kind of person, maybe if they're helpful anyway in their dorm, that might be a great student for candidate for becoming an RA later on down the road. Typically you can't do it freshman year. And there may be other scholarships that are available. There's often a portal at the university or college. Okay. The Harvard Federal Credit Union does have a scholarship as well. We have finalized that for this year, but if anybody's on this call and has a student who's a junior or rising up sophomore, when your student's in their senior year, they can apply for a scholarship from us. We give out $1,000, $1,500 scholarships, or that's what we're doing currently. And that is open to the children of our members to apply. So you can go ahead and bookmark that. I'm going to drop these links into the chat as well in just a minute. So you can kind of keep your eye on that and look for our scholarship as well, because that's something we're really proud to do and to support our students with. So how are you going to pay for this this tuition? Even after scholarships, it can be really daunting. So we like to kind of break it out and just think of it or conceptualize it as you're paying for it with amount from the past. This is your savings, amount from the present, where you're going to cash flow and say, okay, I'm going to be on a payment plan and pay this amount per month to the college. And then future, and we'll talk about that, like how your student may, be paying back loans later, because with their future earnings, they'll be in a better position to do so. So first, past income. So some people on this call may have a 529 plan or another college savings plan that you have been using. So you need to, again, at the same time that you're having those conversations in your family about what you can pay, you want to look at your college savings plans and think about, how many children do you have who are intending to go to college? How are those savings going to be split up? And think about a plan for withdrawing funds. Conventional wisdom is often to deplete your 529 early in the process so that later you'll be eligible for more financial aid. But you may have other reasons why you don't want to do that. So just think through what your comfort level is. Yeah, and so and just as far as how the process is, it's very easy. You want to leave yourself 10 days between making the transfer instructions, and best for a 529 to send it directly to your school if possible. There is an option to have it paid to you, but then you have to keep track of all the accounting that it was the kind of expense that you are allowed to use your 529 on without tax disadvantages. So if you have it paid directly to the school, it's going to be much easier for your accounting. And I do advise you to leave yourself 2 weeks to 10 days for that transfer. It does happen fairly quickly if you have your Vanguard or Fidelity or something like that. But you don't want to get yourself into a situation where you're late making payment. And if you are, again, just be in communication definitely with the bursar's office and the financial aid office so that they are aware that the money is on the way. So we talked about the past, your savings, whatever they are for this. Now you also have your current cash. You may think about, when you're thinking about your cash flow for the year, there may be, you might be wanting to think about using part of a tax return for putting towards tuition. You may, again, want to be doing monthly or lump sum payments, depending on, maybe you get a bonus and you know that that amount is going to be allocated toward tuition. So think about that as you're planning how you do your spending. I see in the comment that somebody is mentioning that when they were at Wheaton, they did not allow that person to be able to remove all of their meal plans. So definitely be in touch with your college or university about what is allowed in terms of that. That's a great comment. Thank you. So then we have future income. And what we mean by this is you, the parent or the student, may be taking loans and be paying for some of this expense with future income. For most of us, that's the reality. So, education is a great investment, but you also need to think about other considerations as well. And we'll talk about balancing some of those. So first, we have your federal student loans. Those are going to be the direct subsidized and unsubsidized loans, plus loans, which are for either graduate students to use for themselves or parents to use. And in general, federal student loans offer more options for repayment, forgiveness, and deferment. You may have been seeing news. There's been a lot of news from this administration of different forgiveness programs that have been aimed at different groups of students. And so as much as you can, using federal student loans can really make sense. You may also need to use in addition or choose for whatever reason to use exclusively private loans. And so private lenders are going to be offering, like banks and credit unions will offer loans to students or to parents. And there may be a number of different loan programs available that you are eligible for. So start shopping around if you feel like that's going to be a need that you have. It's always better to just have the information and know that things are available to you. So to go a little bit more into the federal direct subsidized and unsubsidized loans, you may have known these as Stafford loans. That's what they used to be called. So now they're just federal direct. So at those loans, the student is the borrower and there is no credit check required. And undergraduates are eligible for subsidized loans. And the interest is deferred so long as the student is enrolled at least half time. If you have a situation where your student needs to take time off for whatever reason, be in touch with your loan servicer, and you're going to want to just balance that against the fact that you're going to have interest start accruing again. And there is a 6-month grace period before you have to start repaying them. These are the current rates. So these are like the whole country. Everyone has these same fixed rates for undergraduates and graduates. So it's 6.53% for undergrads, 8.08 for graduate students. There is also a loan fee of 1.057%. Remember earlier I was talking about that example student, and they're eligible for $5,500 in loans, but they're only getting a 52 something, I can't remember exactly, because there is a fee. So you have to keep that in mind too as you're figuring out what you need to pay your college. So these are the maximums that students can be borrowing. So your student may be eligible for $5,500 as an undergraduate. If they're most of the people on this call are here because they're a parent, and therefore your student is a dependent. That's not the same as whether or not you claim them as a dependent on your tax return. So just if they are your child and they're relying on other people for food, shelter, etc., they're your dependent, and they can get the maximum amount. Independent students, if somebody has been in foster care, if somebody has been in the military, is married and going to school, they would be, isn't a full adult, they would be an independent student, and they're eligible for more loans, $9,500. And these are the amounts for second year and third year. They do increase somewhat, which can be helpful because many students get scholarships that are 1 year. For instance, my daughter got a city scholarship. It helps her during her freshman year, but we won't have it in future years. And then there's an aggregate limit as well. So you want to keep this in mind as you're doing your overall planning. So then we have the PLUS loans, which are either for parents or graduate students. So parents may be the borrower, so long as the student did complete their FAFSA. We're going to talk about that a little later, but your student should have completed their free application for student aid. And that's known as the FAFSA. And so this shows the interest rates. If you're a graduate student, you would be the borrower typically. And there is a grace period for graduate students of 6 months for you to, when you're graduating, to get a job before the interest starts accruing, and before you have to make payments, sorry. So this is the current interest rate for those programs, and the loan fee, which is a little bit higher, as you can see, or a good amount higher. So it's 4.228, so more than the direct subsidized loans that we talked about earlier. So to talk about the loan fee a little bit, if you borrow $10,000, the fee is going to be $422.80. So the school is only going to receive, the money goes directly when you borrow these federal loans, the money goes directly to the school. That's another nice thing about it. You don't have to worry about that. But the school is going to get, if you borrow 10,000, the school will get 10,000 minus 422.80. So you either need to send them a check for the 422.80 or cover it some other way. So that will usually be reflected directly in your tuition bill, but it's just something you don't want to be surprised about. If for whatever reason you're denied, there is a credit check required for the Parent Plus. If you are denied a loan, then you do have the right to an appeal to the Department of Education. Another option would be to ask or bring in a cosigner. So somebody else that would help you be responsible for repaying the loan, ideally someone with better credit. And for either option, there's a required online credit counseling course, which is actually a great course to do anyway. So if you want to know exact amounts, rates, terms for your student, that's going to be on studentaid.gov or yourself if you're the student. So this is the same place where you filed the FAFSA. So hopefully all of your students have done that. If they haven't, that's definitely something to do ASAP if they're going to be in school next year. So after you've got your federal loans, your direct loans, then you might be also looking into private student loans. This could be through a bank, through a credit union such as ours, Harvard Federal Credit Union, through a private company. The terms are going to be very different depending on the lender. In general, credit unions are going to be very upfront about what their fees and interest rates are. So that it can be an advantage of a credit union is that, we're here for our members. So we're really trying to be honest with them and about what to expect. And there may be different grace periods. So again, know what your loan is that you're thinking about. So some of the benefits is some of our credit union, for instance, offers an interest rate reduction with auto pay, and that is something that you can look into as well. So if you're not sure what your credit looks like or you haven't looked at it in a while, we do recommend you can get a free copy of your credit report every week. Actually, there's 3 different credit bureaus in the United States. If you're not from the United States, you might not be familiar with this, but there's a thing called your credit report or your credit rating. And this is the only website that is authorized by the federal government. Please do not go to any other website to get your credit report. This is the one we recommend, and it is free. It is sponsored by authorized by federal law to provide you with your credit report. And so that's going to give you a sense of where you stand for when you're going to be applying for loans. And it can be good to just review it too. We have some financial wellness education materials about credit reporting and improving your credit score. And I'll talk about one particular option in just a little bit. So there are ways to improve it and also to make sure that all the information is accurate to you, because sometimes something ends up on your credit report because there's another person with your same name or similar details. So for non-educational loan options, you will be wanting to think about what are the tax implications of taking that loan, what are the fees, just as it would be with any, like for instance, you could take a home mortgage some people take a second mortgage on their home, basically home equity loan, in order to pay part of the tuition. That may be something that has tax advantages, but there are also potential downsides, one of which is that you're putting your home as collateral for this. So you really want to make sure that's something you can afford. What other fees there might be? What about if you needed funds for an emergency now, so you don't want to tap out your credit so much that you couldn't borrow for something that you needed. And I think most important for parents to think about is what would be the impact on you and your retirement age when you can retire based on what you're borrowing. So you want to, we all want the best for our children, and we want to provide them with as much as we can. But you can't borrow for your retirement. So you do want to think about, okay, when would I be done paying this loan? If you are going to take one, does this impact my ability to contribute to my retirement savings, and how much? And so it may be more appropriate for the student to be doing that borrowing. So that is for you to consider. All right, so loan factors to consider, the big picture bucket things that you're going to want to look at. What's the amount you need? And the amount you need is the cost of attendance, sometimes called COA, minus any aid you're getting, grants, or scholarships, and that's going to be your need. You want to look for the lowest fees for any loan that you can find. You want to look at the interest rate and compare the same interest rate across different loans. Who's going to be borrowing? Is it the student or the parent? You want to avoid loans that have prepayment penalties. You want to be able to pay off your loan early if you'd like to. One thing I didn't mention also for the parents to keep in mind is, if you do borrow a loan, do you have coming up in the future something where you're going to need a loan for a new car, or for something for your home? You're going to be refinancing or buying a new home. So you don't want to have so much of your credit out that you can't make those payments as well, or access that credit as well, sorry. So the timeline about what to expect, you would be applying for a loan. Typically you apply for the loan annually. It may be by the semester, depending on the institution. And the student completes additional documents, typically accepting the loan and some required counseling that they have to do. And the college or institution is notified of the approval and the amount. And then the funds are dispersed at a later date. So particularly if you're doing a private loan, you want to be talking with them about timelines, so you want to know that you can have it to the school by the deadlines. And so non-educational loans, if you're going to tap into one of those other sources of credit, they are usually sent to you, and then you're going to be responsible to send, you, the borrower, and then you're going to be responsible for sending that money to the college. So keep that in mind too, in terms of your leaving enough time for yourself to hit those deadlines from the college. So a lot of the information that we're talking about is taken directly from the IRS publication 970. So you might want to just take a look at this if you want to see some of the source documents and how it applies to you. And Harvard Federal Credit Union, we do offer educational loans, and both undergraduate and graduate. So you can always check our rates, or reach out to somebody if you want more information about private loans through the credit union. Beth Israel Lahey Health also does have a tuition reimbursement program. If you are the person who is going to school, I know at least one person is pursuing a second bachelor's degree in nursing for themselves. So if you are currently a Beth Israel Lahey Health employee and you want to know more about your tuition assistance program, you're going to want to go to the Sentinel Tuition Assistance Program and take a look at what the amount is per year and what the requirements for eligibility are. So let me just see. And I will put those links into the chat as well in just a moment. This is going to be a really important resource for many of you, I believe. Through Harvard Federal Credit Union, you do not have to be a member to access this benefit. So you don't have to be a member of our credit union. Just when I give this link will allow you to access these services. We have a partnership with a nonprofit called Green Path. And Green Path does free counseling, financial counseling around a number of issues. If you want to clean up your credit or you just want to know more about your credit, they offer free credit counseling. If you are in debt and you can have concerns about paying back debt and how you're going to do that, they offer free debt counseling and very low cost, what's called debt management plans. If you need help with a budget, housing, but what's most relevant to this webinar is if you need counseling around student loans or those Parent Plus loans and, you know, what you should take, how you should approach it, either you as the parent or your student is eligible for free counseling, free confidential counseling with Green Path. And I'm going to put this link into the chat. And I definitely encourage you to take advantage of Green Path because it's a great resource. Another resource, particularly if you're in Massachusetts, I'll just mention, I don't have it here on the slide, but we do have an organization called the Mass Educational Finance Association, or MIFA, and they offer webinars on paying for college as well, and lots of stuff that's specific to our state school system. So I do recommend, looking at MIFA. They also have educational materials. We do have a blog with lots of topics, including many of these topics as well that you may want to take a look at. We are going to ask for your feedback about this webinar and whether it was helpful for you. Please complete the survey if you can. And finally, this is obviously educational in nature. It's not your personal tax, legal, investment advice. We do recommend for individual advice to be in touch with Green Path. Okay, so I am going to first put these links into the chat and then, okay, and then I will turn to your questions. So the first link I put in the chat is just our website, harvardfcu.org. Our scholarship link that I promised you. Then we have studentaid.gov. That is the FAFSA, but also where you see your loan terms and for any of the direct loans that you're getting. Then we have annualcreditreport.com. That's where you're going to get your credit. You can pick there's 3 services. You can pick whichever you want. You could get from all 3 every week if you wanted. That might be overkill, but I do recommend you take a peek a couple times a year, and certainly right now when you're thinking about getting loans, at your free credit report. Then we have our harvardfcu.org educational loans. That is where you would go if you wanted a private loan through us or just to talk to someone about a private loan through us. Here is the link, sentinelgroup.com/BILH/benefits is where you go for your tuition reimbursement benefits through Beth Israel Lahey. And that would be if you're the student. And I do not know the exact eligibility for that, certainly. So, but do take a look because you may be able to get reimbursement for some of your tuition benefits there. Then Green Path is the one that I have been reiterating over and over again. And you know what? I'm sorry. I think I'm going to resend this. Sorry. I think I sent it just to the panelists. So here we go. These are all the links that I've been mentioning. Please copy them for yourself. So Green Path is near the end here, and that is the one that I was saying you can get free financial counseling. I really recommend that if you're not sure. Also, when your student's coming out of school, it is really good for them, or if you're the one coming out of school, they can also do counseling around loan repayment options, like how to repay, what forgiveness programs, what should you elect in terms of the term, because so you can ask for like a longer term for your direct loans, federal loans. So Green Path is just great resource for you, and please take advantage of that. Again, you do not need to be a credit union member to use that link. And then the survey link is there as well. We would love your feedback. So please put any questions that you have into the chat. I know I've answered some of these. One of our people commented that they have existing loans and they're seeking to avoid loans for the second degree. I think that that is smart, and there may be ways to do that. If you're a Boston resident, I also recommend you take a look at our local community colleges. There is an option for Boston residents to attend community college for free, and some other people have community college benefits like that. So you may be able to take some of your coursework that way in order to minimize costs. So that is definitely something to take a look at. I have an attendee say that their chat is disabled. If that, does that mean that you are not able to get the links at all? Or are people, if people are not seeing the links, what I will say is that we send out the whole presentation afterwards. We send out the slides, and then I can include a document with just the links. But hopefully that was just because I accidentally sent it to the panelists. And okay, yeah, so someone says that they can see the links now. They cannot chat amongst themselves. I think that's just how the webinar is set up. So I think we have answered all the active questions. I'll stay on here for just a moment in case anybody has any additional questions. And this is my email address here, and our new address on all social, like our handle on all socials, is going to be Harvard FCU. So take a look at that. And you can always come into this is our main branch on Mount Auburn Street, but we also have a branch in the Longwood medical area that may be more convenient to some of you. So please feel free to visit us there as well. So thank you, everybody. It looks like we have answered everybody's questions, and I appreciate you coming out and on your lunch hour to participate in this. So thank you very much, and we will wrap it up.